Okay, so let's start. Welcome to the third webinar of weekly webinar of Nimbus Capital. So I'll be doing this webinar weekly, but of course, as I've mentioned in my Patreon and my Facebook post, right, this webinar is actually meant for the subscriber to my Patreon, so it's actually meant for the highest subscriber. But currently, right now, until the end of November, this webinar is recorded and is sort of like a free trial for those who do not wish to subscribe yet, but want to check out if the information is helpful for you in your trading journey. So I'm giving it out to the public for this 1 month lah. Okay, you so let's start off. So firstly, as usual, we will look at the SGX fund flow. So do be reminded that this fund flow, it has a delay of 1 week. So if you notice, the fund flow is meant for the SGX 1 week ago, meaning the previous week, which was around the week of 26 October. So here what you can see is that both the institutional did some selling and the retail did some buying for the previous week, which is why if we look at STI for the last week, Singapore market for previous week generally, right, it's not really that bullish. But however, this week we have really great run, but the fund flow data will be only out on Monday. So by Monday afternoon, right, I'll be posting the fund flow updated fund flow result. Then we'll be able to see if this rally is powered by institutional or it is by retailer. I do hope that it is led by institutional, mainly because as you can see that throughout the whole COVID-19, if you look at the dip on the institutional fund flow, right, it is sort of creating like a higher low, and hopefully one day we can go back to positive, and of course as the Singapore market recovers. But you have to also take note that this volatility from for this week on the STI going up, right? It is definitely being fueled by the US election. It does seem that the market favor Biden compared to Trump. So we do have some kind of volatility coming in. Hopefully next week the up move, the momentum of the up move can persevere and the market still goes up, which is the best for everyone. Of course, if you do look at the cumulative fund flow on retail and the institutional, right, the institutional is still heading downwards, but by start of next week, I do hope we can see some reversal, some trends going up lah. So do look out for the fund flow data report on Monday, and I'll be posting it lah. So for those who are not aware, these fund flow data can be extracted from xgx.com. What I'm doing here is that I take all the value and I draw them into a chart, so you can see a graphical representation, which is nicer and easier to see. So going below, let's look at the STI index fund flow. This index is mainly for the counters that are part of the STI constituent. And you can also see that for the previous week, right, both institutional and the retail are going in the opposite direction. And of course, the institutional is going in the downward direction. But of course, previously, like what I said with the SGX fund flow, we are sort of starting to see a higher low in terms of the fund flow. So hopefully by next week, we will be able to see some positive coming in. With that said, right, let's look at some of the chart and some of the stuff that happened this week. I think it is quite an exciting week. I did put out quite a lot of trade setup, which I hope you do manage to take a few of them, because some of them are in quite a profitable zone, and I'll share with you the stuff that I personally took position. Okay, so firstly, let's just have a quick portfolio update. So you can see this is my current portfolio now. So you can see that STI did recover. So the benchmark is STI, the purple color one. It has quite a good recovery. Of course, it went up quite sharply, but of course you can see that my portfolio, it does goes up a bit, but doesn't go up as sharply, mainly due to one reason, that is I don't really trade counters that are part of the STI index. For one very good reason is that STI counters in STI such as Keppel, Mapletree Logistics, the three banks, DBS, Singtel, all this, right? I do not trade them mainly for two reasons. Number one, I have dollar cost averaging monthly plan on STI ETF. So every month I have a fixed amount of money going into STI ETF lah. So I don't want to that is my long-term portfolio. So I do not want to double up that on my trading also. So in my trading portfolio, I stay away from STI index lah. And also secondly, trading is much more short terms and I'm looking for much more return from a trading portfolio. So if you look at counters in the STI index, those very expensive counter, right? What you will see is that they move, they doesn't move a lot. So if you look at it, right, if you look at counter like DBS, right, it is very hard for $20 counter like DBS to go from $20 to $40, double in value, double in share price. And it is even hard for $20 to go to a $25. But if you look at those very penny cheap counters that I tend to trade, right? For example, like CNMC Goldmine, Aspen, maybe hopefully Kimley, all this counter, right? They are like 20-cent counters, 30-cent counters, and it is not hard. It is not uncommon to see a 20-cent counter go into 40-cent, double in value. So in trading, right, I will aim for that kind of cheap counters instead of expensive counter lah. And secondly, also cheap counters, you don't need a lot of capital, so you can actually enter many small position into cheap counters, and when they goes up, right, you add on more to the ones that are going up, and those that are stuck there, you just let them be. Whereas if you trade counters like Singtel or DBS, the moment you go in, right, a huge amount of your capital is stuck inside this one position. And sometimes if the counter is stuck, right, your position is locked inside there, and you don't have much option to trade other counters that are running lah. So that is one of the disadvantage of trading expensive counter also. So I do tend to stay away from that lah, which is why you see most of my trades, they are very cheap counters. They are mostly below 50 cent, that kind of counter lah. Once in a while you will see things like AEM, high P, but most of the time they are usually very cheap. So for this particular week, I did have quite a lot of transaction happen, which I will go through earlier. But of course, you do also have to take note that while I does post things that I've taken profit, right, you will notice there is a lot of counter that I am currently stuck also. Because they are stuck, right? I don't really need to announce to the public that, hey, I'm stuck here. But because I show my portfolio right now every weekly, you can actually see all the stuck counters here that have been inside for quite a while. And as long as they do not hit my stop loss, right, I do not prematurely exit. I just let them be. So this counter, right, you can actually see AEM. AEM has been here for quite some time already, probably about one month like that. Asper has been there for quite some time also. iFast, you realize iFast, I only left with 1,500 shares. I mainly take profit, majority of them. I actually sold 8,000 of them, but I leave 1,500 shares there lah. So another trading style that you will notice about me is that whenever I TP a position, right, I don't fully take profit on everything. I leave a small amount of shares there just in case the price shoot up some more. I still have remaining shares to ride the trend lah. So you can also see that actually high P previously, right? Previously when I entered high P at 1.13, and then I took profit around 1.3, right? I leave a bit of high P shares there, but right now I have a new position on high P at 1.3 lah, which is why you see high P start to increase in the share again. So so among that, right, I have Kimley, I'm still stuck there, but I just let it be. Haven't hit stop loss yet, and they are not, although they are not making a lot of profits, right? They are like just hanging there lah. So I don't touch them. Union Gas also I have entered, but they are not moving, so I just let it be. So those that doesn't move, right, I just leave it there. But those that move, I will keep adding on more shares to those that are winning lah. So this is how I actually add on to winners, and my winning profit compounds while those stuck not moving or gonna cut loss, right, I just let them be. So also you will also have to take note that this portfolio was started in somewhere around mid-August lah. I think slightly back back already, around mid-August like that. So there are actually a few shares that I am currently still holding that are stuck, which is not within this portfolio that I have entered before I created this portfolio. So this counter include things like Food Empire. Food Empire, I'm still stuck inside, but I just leave it there. And another one that I'm stuck is also Kofu. Kofu, I'm still holding on to it. It is still stuck there, but I just let it be. So what I'm trying to say is that I do have a lot of counters that I recommend, but they did not run, but they are stuck. However, I don't prematurely TP also. I just let them be, because the thing is my trade is still valid for all these trades. My trade is still valid. The stop loss is not reached yet. So I just let them be. So in order to go with this kind of strategy that I use, right, you do need to make sure that let's say you have a capital of $10,000, you don't go and enter like $5,000 on one single counter. So try to spread them out so that you can keep adding to the winning one. And those that are stuck, right, you only stuck a bit of your capital there. So because of this, right, you do require quite a large capital to make this kind of strategy, probably around 50,000 to 100,000 to make full use of this strategy. If not, you can definitely go with CFD, but if you play with CFD, right, those counters that are stuck, you are going to get your finance charges. So that can be quite a disadvantage also. So, okay, so this is mainly a quick update. So I make this post not long ago on 6th of November. So just to go through the stuff that I traded. So you can see here in this Patreon post, right, I did the summary nicely ready. So in the future, in all portfolio update and open position, right, you'll see something like this. So for this week, I added 150 shares of Garmin. So this is actually a link. So when you click this link, it will give you the actual post where I made the Garmin trade analysis. So this was the Garmin analysis that I made. Okay, so in the future, you will see a much more organized update like this. So Geely Auto, I entered 800 shares and I managed to TP within this week at $21.09. I entered at 17.9. So here, yeah, you will notice that I don't TP fully. I leave a bit of shares there so that they can ride further. So if you click on Geely Auto, you will also see the Geely Auto trade setup here. Okay, then nextly, I also entered Hype, another 1,500 shares more. AEM, I don't have any official post on AEM in Patreon, but I do have it on Facebook, so you can refer to the Facebook one. I didn't link anything, and so I added another 5,000 more shares, actually at a lower price. And of course, CMNC Gold Mine, I added another 30,000 shares at 315. So these are my position update for this week. And also do note that while I share a lot of counters, I do not enter them all, mainly due to one very simple reason, and that is I do not have unlimited capital. So I don't have enough cash to go and enter everything. Actually, if given a chance, if I do have that amount of capital, I will definitely enter everything that I posted. But of course, because due to that limited capital, I do have to pick and choose which are the one that I like, which are the one that I think are better. So most of the time, right, you will not see me entering everything that I share. Although those that I pick out, I do believe that they have equal amount of high potential to go up. So this is my weekly update. So let's look at some of the counters for this week, and I also feel that have potential for the coming week. Firstly, let's take a look at STI itself. So at STI, as I said, it's a very good run for this whole week from Monday, Tuesday, Wednesday. Friday is sort of rested a bit, and it's also rested at the resistance area around 2560 there. So there is a reason why price rests here for a while, and that is we are at this resistance level. Of course, we have established a very nice support level around 2425 to 2440 around this level here. So what I wish to see next week, right, there's definitely going to be some volatility coming in. So at least I will want the price to hang around this resistance level, hang around there for a bit, maybe 1-2 days. And if there are no seller coming in to push it down, right, I do hope the price to go up further. Maybe towards the next level that I'm looking at is about 2691. So let's round it to 2700 lah. So hopefully price can go back up to 2700. But of course, if too much seller is present here, then we will see some retracement lah. This is quite hard to say which way it will go, but I do hope that given this momentum we have for this street, right, it can continue to go back, continue to go climb further up. But of course, we cannot totally discount the idea that it has a chance to go back down also. So this one at this moment, it is really 50-50 lah. Okay, so among the better performing one, right, we have DBS. DBS performed extremely nicely. You have 2 good days. Then here it sort of scares everyone for a bit, went down a bit, but eventually recovered. Then Thursday recovered by a lot. And you can see that on Friday, we have a similar, like a deja vu happening, a similar series of candle lah. Although these two seems like exact same candle, like what you can see is that the volume behind these candles are somewhat different, because if you look at this green candle and the volume behind this green candle, right, this volume is actually half the size of this volume, half the size of this particular volume here. Even though the candle is of the same size, the volume on this candle, the second candle, is almost double. What it means is that to move the price for the same amount, right, you actually require twice the number of force. So meaning there are sellers coming in, which is why you require much more volume to push it back up. And you can see those sellers quite apparent on Friday itself, because price actually moved back down initially before it start to recover. But the good news is that price does recover above the closing of Thursday candle. So I do hope this momentum to continue and DBS can go up to $23 level. So if you are someone who wish to trade this, although I do not recommend trading banks for short time frame, right? Mainly because I believe these are more for long term. If you want to trade, right, as I said, trading a counter that is like $20 is not worth, the return on investment is not worth your capital lah. But if you do really want to trade this, of course your stop loss need to be so I'll always emphasize on stop loss, because stop loss does 2 things. It allows you to stay in the trade. It allows you to ignore all the noise action, all the volatility. As long as your stop loss is not hit, you don't exit. So if your stop loss is placed strategically, right, you can stay in the trade and you can ride out the trend lah. So for example, in this case, firstly, the price has broken out of the resistance here. So if I want to trade this, right, you will have to ask yourself, at what point will my trade become invalid? Your trade will become invalid when price fall below this candle. Because it's price fall below this candle, then it is bearish ready. And of course, you also want the price to go back below resistance. That is when your trade become invalid lah. So if you want that long position, your stop loss need to be around somewhere here, 21 or 21.2, somewhere here. Your stop loss cannot be here, your stop loss cannot be here or here, mainly because your trade, if the price is above the resistance level, right, your trade is still valid. What can happen is that price just retrace for a while, rest a bit, then it goes up and your stop loss will be taken up. So your stop loss need to be at the level where your trades become invalid. So probably around 21.2 or 21.2. So at least when price ding dong here, right, you are not going to get stop out. So now the questions become, let's say the next resistance is here. This is the next resistance, and this is your previous resistance, and this is your stop loss. This is your stop loss. Okay. So now you have this scenario, and this is your current market price is at 22.5. So now what you need to ask yourself is that, given this current price and this stop loss and this potential take profit level, right, is this trade worth taking? So obviously looking at this right now, probably not, because your stop loss is too far from your potential TP lah. So it might not be a good idea to take this trade, but the thing is, you can actually wait for price to retrace. So maybe next week, if price retrace back down to 22, right, now price has gone back down to 22, then this trade might look more attractive to you. then you can definitely take this trade. So sometimes it is good to wait for the price to come back down a bit. So what happened is most of the time, right, when price come back down, a lot of people are scared to enter because yeah, price come back down really, scared really. But as long as, no matter where the price go, as long as your trade is still valid, which is above the resistance, right, you can actually enter without fear. And of course you place your stop loss properly lah. So when you look at all my trade setup, right, do think from that kind of mindset. So the thing is that all my trade setup, I have provide you the stop loss level, and I provide you the potential TP level and all the potential entry level lah. So you trade with that mindset, and most of the time, right, you will be fine lah. The number one rule is, if the price does not hit stop loss, you don't exit. And if the price hits stop loss and you cannot stop out, make sure that the amount of money you lose, right, is something that you can handle, probably around 3% of your total capital. I personally do 5%, but maybe 5% too much, right? You can go for 3%. So try to calculate out your lot sizing and shares before you start to take the trade lah. Okay. So for the other counters, right, I will not be going through in such a detail. I'll just briefly go through. You can actually find all these counter in my Patreon lah. I have made the analysis at one time or another. So let's look at the Singapore counter first. I've gone through DBS already. So the next counter, Jaffa is the I would say one of the the star that went that performed quite well last week, and I mean this week, and I have not made any analysis on Jaffa yet also. So I'm going to use this opportunity. So firstly, it broke out of the resistance here. Then of course your next resistance is somewhere around 0.825. Then your current price is 0.85. So like I said again, if you want to trade this, you need to know where to place your stop loss. So your stop loss need to be at the level where your trade become invalid. Your trade is invalid if price fall below the resistance level. So probably I will go for my stop loss around here to be safe. You don't want to be just like touching the resistance also, because it can sort of go down a bit and then take you out. So you want a bit of good buffers. So let's plot all the point again. Current price, then this is resistance. So your stop loss will be probably around, let's say 70 cents. This will be your stop loss. So once again, you look at this, you look at the current price, you look at the resistance, and you look at the previous resistance, and you have to ask yourself, is this trade worth taking? This is your potential profit, and your stop loss is here. So definitely too far from your stop loss already. So what you can do is also, of course, the same thing. Wait for price to retrace. Maybe price retrace to around somewhere here. Then it becomes slightly more attractive. Then you can take that trade at the retrace lah, and it's much more better. Or if you have enough capital, you can always make 2 entries. You can enter a bit at the current price, and you can enter another set when price retrace. So you have 2 entries. So if your commission, if the brokerage is giving you low commission like Tiger Broker, right, this kind of entries is definitely worth taking rather than going everything at the top lah. So let's say you decide to wait for retrace, but price just shoot up, right? What do? You simply let the trade go. It's okay, mainly because there is a lot of other opportunity around. It's better to miss a profit than to chase and then stuck at the top. So if this is gone, right, just simply let it be and make other trades. You have noticed that I keep mentioning I don't always chase the most powerful moving stock, because throughout the whole COVID-19, I miss out Top Glove and Riverstone and things like that, because when I see that it's gone too far up, I don't chase. I simply go hunt for other things lah. So that's the kind of decision that you need to know how to make. So like I said, given this trade setup, right, maybe I will want for it to come back down a bit before I make the entry lah. So this kind of entry is good. So you can definitely keep this in your watch list. Next one, Hype. I'm not going to say much really, because I think this is the counter that I have been repeating quite some time, and it has been on my Facebook page for quite popular one around. So my initial entry was here, and then my second entry was here. I took TP like somewhere like around here. I think I took TP on this candle, and then I take the trade again like 1 day later like that, because I saw that it has broken out lah. So so right now, as the price it is right now, right, it is currently hovering around at the resistance. So my next TP level is actually 1.4. So haven't hit yet, so I did not TP. So what you can do is that normally if it doesn't hit, I don't TP lah. I just wait for it to go back, go hit my TP lah. So for those of you who did not enter this, right, who have not entered this yet, you can actually wait for the breakout trade. And if this trade breakout, you can enter the breakout, because you see on the Friday candle, right, the volume is quite high and there's quite a good momentum behind it lah. So if it does break out in the coming week, right, you can take the breakout trade. I will definitely post it on Patreon and Facebook also. But once again, you do have to take note that the next resistance level is around 1.5. So you need to ask yourself, when it break out, right, is this worth it? And where would your stop loss be? Your stop loss will be definitely, of course, below 1.4, below the current resistance of 1.4. So your stop loss might be around 1.25, or maybe 1.25 too much, right? Maybe to 1.28 like that, maybe around there. So you need to ask yourself that, is this worth trading with this amount of risk? So there's always a risk involved, which you need to ask yourself, are you comfortable with it? Next one, the next counter that I'm looking at is UMS. UMS also, like, it is a high P brother lah. And in fact, if you look at UMS, the last 2-day candle, Thursday and Friday candles are quite bullish. You can see that there's a sudden increase in volume and price start to go back up. And in fact, for UMS, right, you have a support here. So if you want to trade this, your stop loss can be just right below the support. So from the current price until your stop loss, right, which is somewhere around here, it's not really so far off. So it is quite a good trade you can take. But of course, if you are taking this trade, then you definitely cannot TP at 1.05 lah. It's too much. It's too little already. So you probably want to TP around like around 1.15 like that. So the thing is, we don't know whether price can go to 1.15 or not. We do not know. We are not trying to predict the future. But what we are trying to do here is we are trying to sort of make a trade plan. So you need to ask yourself, are you comfortable with waiting the price until it hit 1.15? And with this kind of stop loss, so this stop loss versus this potential profit, if you are comfortable, then you take the trade. But if you do take the trade, right, you don't halfway in the middle scat and TP, because if you TP, right, then your trade plan is skewed already. What seems like a 1-to-1 risk reward ratio that you took, it actually end up to be a 0.7 risk to reward ratio. And if you keep doing all this, right, eventually there will be some trades that you are going to hit your stop loss, and you'll realize that actually your trade are not doing quite well also. So you do need to make sure that if you have a TP plan ahead, right, make sure that you wait for the TP. That is why previously in high P, right, I did not take this TP yet. I am going to wait lah. So make sure you do follow your trade plan. And in all my Patreon posts, right, the stop loss level and the TP level are levels that I sort of chosen strategically. They are not anyhow just put there for fun. Those levels are thought through carefully before I place them. So do follow those level religiously if you are following my trade setup. Okay, next one, CMSC Gold Mine. So I entered CMSC Gold Mine on Friday, but if you notice on my Patreon post, the first CMSC Gold Mine trade setup came in at this candle. So my Patreon, the initial post is came in at this candle. So I do not actually have a trade setup post for this candle here. So if you go back to my Patreon, you dig up CMSC Gold Mine, right? It's actually right here. But of course, I back then I did not enter it right here, mainly because I did not have the capital, have pre-capital, but I managed to enter this since I have some capital open up after selling iFast. So it's actually a good resistance breakout here trade, and you can place your stop loss quite comfortably around this level, 2.45. So my trade setup, the stop loss was placed at 2.45. So we are looking at profit level about 3.75 here. So you are looking at this amount of profit to this amount of stop loss. If you are comfortable, you can definitely go for the trade. And hopefully Monday it doesn't gap up. If it gap up, then if you gap up and you are not in the trade, right, then you won't be able to enter this ready. And next one going forward, Aspen. So Aspen currently it is halted. So I'm not sure why is it halted. Nobody have any idea, but when a stock halt, right, it doesn't mean it is 100% bad news. Maybe it can be good news also. Who knows? But but the chart itself, of course, it does look bullish. And my initial entry was at somewhere around here. The very first entry was way back around here like that. So I do have two entry here and another entry here. So currently I'm looking at the TP level about 3.4 and the previous high at 4. So I am still in this position. So for those of you who feel that this red candle is very bearish with quite a good red volume there, right? I can tell you that this red candle is not a bearish volume. In fact, it is a very bullish volume. So let's look at these three candle in isolation. This candle, and this candle. Okay, so let's disregard all this. So to make it simpler, let me just do this. Okay, so let's look at these three candles here. So what you notice about these three candles is that they have similar volume. This volume, maybe this one slightly higher, but they have around similar volume compared to this whole stretch here, right? The volume is very low. So what you can see here is that let's compare the first two candles. Let's compare this candle and this candle. Let's compare this candle and this candle. So if you look at these two candles, right, they are of similar volume, but the first candle has a very small body, compared to the second candle. It's about 1/3 smaller. So what you can actually see here for this first candle, right, they have the same volume, meaning there's a lot of seller present in this candle. Whereas in the second candle, there's not much selling present already, mainly because given the same volume, this one goes up much higher compared to this, meaning there is very little opposing force that coming in. That's why it allowed this candle to go up much higher compared to this, given the same volume. Then if you look at this so-called bearish red candle, right, what you can see is that this red candle actually have even higher volume than this candle, but the body is only half of this candle. So if it is truly sellers coming in, right, this amount of volume, it should push the price down even more than this candle. It should be like an engulfing candle like that. But the thing is, although the volume is higher, the body is twice as small. Why is the body twice as small while the volume is higher? Mainly because there are opposing forces coming in. There are actually a lot of buying coming in that is soaking the price. That's why it only falls half. That's why the candle only move half the size of the green candle. So actually there's quite a lot of buyer present, which is why if you look at the next few candle, right, the price is hanging around there, but the volume is getting lower and lower, mainly because no one's selling already. No one's selling. So given this, right, I do believe that as long as the halting is not a bad news, right, when it unhalt, it can go up some more. But of course, all this kind of analysis, right, it is not always 100%, mainly because who knows, there can be sellers that are looking up here, then after it unhalt, they panic and they sell down. That thing could happen also, but I'm just saying that it is of high probability that this analysis is correct compared to any kind of other explanation that you can find. So which is why when I saw this setup, right, I believe it is a higher probability for it to go up rather than go down. Thus, the long position trade was taken. So if you are not in the trade, you can wait for it to unhalt and hopefully we see a good up move. So VIC Plus is also another one, mainly because right now it has fallen quite low. It has quite low towards this support level here. And after it fall to the support level here, we can see that there is a sudden increase in volume, and this candle is quite bullish. So what this means is that you see all these candles here slowly going down, right? The volume is very little. It means that the selling is drying out. Eventually the selling is drying out, and the smart money, the all the big boys, the big buys start to come in again. So hopefully the momentum can follow this and go further up ahead. So if you look at this is a very good trade setup, mainly because you can place your stop loss very nearby, around 0.225, and your TP can be around somewhere 0.385 like that. So if we are looking at this trade, right, 385 or maybe even around 450. So if you look at this two TP level, right, from the current price this much to this amount of risk, right, I think is a trade that is worth taking also. But of course, I do not enter this trade mainly because I don't have enough capital, which is why I'm not in this trade. So these are all the STI counter that has moved or has shown good potential for this week. Definitely next week there will be much more coming out. So every week you can look at my scanner that I post, right? There is seriously too many things for us to trade, too many things for me to trade that I am now having insufficient fund to make all the trades that I want to make. And okay, so with that said, let's go on a bit to the Hong Kong counters. So Hong Kong counters, number one, Geely Auto, I won't say so much already. The trade setup sharing came in here. So I actually TP at around 21.9 lah, which was my, or 22, close to 22 lah, which was my TP one lah. So I took the I take the trade and TP already. But if you are interested in taking this trade, right, you can see that this retracement is actually a good opportunity. So we broke out of this resistance here. And if you can see price coming down a bit, then it hovers here for a while, right? You can actually take the retracement. Of course, your stop loss need to be below the resistance somewhere around like 18.5 or somewhere, or even 18 like that lah, because you don't want your stop loss to be anywhere above the resistance, because if price is above the resistance, your trade is still valid. So let's say if you are someone right, who place a long position on this candle, this is your resistance. So resistance breakout, you place your position on this candle, and then you very stingy, you place your stop loss like here only, you hope that it can chong up faster, right? What happened is that the next day you get stop out by this red candle already lah. So you cannot place your stop loss so aggressively like that. So if you want to chase this candle here, the correct stop loss should be below the resistance, mainly because it can ding dong here, then after that move up. So if you place your stop loss too aggressive and you get stop out, right, maybe it ding dong a bit, then next day chong up, right, you will say that, hey, how come like market stop me out and then it go up? I am always unlucky. I'm the big boy, always want to take out my stockbroker, want to take my stop, but actually it's not none of their fault. It's because you never place your stop loss properly. This is why in my Facebook post I always say that knowing where to place your stop loss is the number one key to be a successful trader. Not knowing where to enter. Knowing where to enter is secondary, but knowing where to place your stop loss is the number one most important thing. So let's look at other counter. Sync point holding. Previously, sync point holding, I mentioned this in my very first webinar. I'm not sure if any of you caught this. The buy was somewhere around this candle here lah. Now same thing you can see here, right? You can see what I mean by this is your resistance level. So if you bought at maybe around this candle, right, no matter what, your stop loss at least need to be like below the resistance lah. It's slightly far off, but it need to be at the point where your trade is no longer valid. So if you are the stingy kind, you place your stop loss here, this retrace will take out your stop loss, and now it continues to rally up already. So you can sort of still go for this trade, but if you go for this trade, right, you don't really have to place your stop loss all the way here. You can actually place it here because any stop has been sort of taken out here already lah. So we have a sort of a new mini resistance forming here. So you can actually place stop loss at 2.4. So you can take this trade if you want. Next one is RiceCom. RiceCom, of course, is also part of my. I made that call not very long ago. Also, somewhere here on 3rd of November. So if you look at 3rd of November, right, price is like somewhere around here, 3rd of November. So 3rd of November is this price. And now price have gotten quite high up already lah. So same thing, the 3rd of November, right, we are going for a resistance breakout. So if we are going for a resistance breakout, right, your stop loss need to be at least generous a bit, at least below this candle here. So if you stingy place your stop loss like here, you will get stopped out by this retracement candle lah. So at least whenever you enter, right, not only your stop loss need to be below the resistance or the support, right, it also need to be below the candle that you trigger your entry. So this is your trigger candle, right? It need to be slightly below that trigger enter lah. Don't put it in the middle of your trigger candle. you can get stop out lah. So this is one of the counter that I recommended, but unfortunately I did not take this trade because, like I said, I don't have unlimited capital, but I do have the winning trade on the Geely Auto lah. So I'm no matter what, I'm still quite happy with it lah. The next one is okay, I don't know how to pronounce this, Melua Health. Okay, so it does look quite bullish, and it's obviously is of course breakout of this resistance. So not really sure when did I post it. 5th of November. So 5th of November is actually on a Thursday. So Thursday is of course this candle. So if you chase the trade here, right? Like I said, your stop loss need to be below. So if I look at my Patreon post, let's look at where my stop loss is. You can see that my stop loss is below that big green candle, below this big green candle. Mainly because if you place your stop loss anywhere here, this candle will take you out already. Then maybe who knows, the next day it sideways a bit and then continues to go up. Okay, so so now that this retrace happened, right, you can actually choose to take this trade lah if you so wish, and place your stop loss at my recommended level that I give. Okay, these are the Hong Kong counters. So let's look at other US counter that are doing quite well. So number one, Arcadia Health doing quite well also. So it is in my Patreon. You can definitely go and take a look at it. So most of my trade setup, they are actually breaking out of resistant trade setup lah. So if I'm not wrong, Arcadia Health trade setup was somewhere here. It has gotten up quite a bit already. Next one is of course 59 trade setup was at this red candle here. This pin bar candle. You can see next day price retrace, but my stop loss was somewhere around here. So no one should get, if anyone follow, no one should get get whipped out by this sudden retracement lah. And now you are probably in the profit already. Of course, Garmin is the one that I personally took the trade. You can see in my Garmin, I took the trade here. So the call was somewhere around this portion here, and currently it's going quite nice up. So Garmin, it might be slightly too late to chase, so you can wait for the retrace if you are looking to chase. Of course, if you don't want, there's plenty of other stocks that you can go in if you don't want to wait for retrace. So next one that I gave was Mohawk. I think Mohawk was quite recently also, if I'm not wrong. It's one of the counters that you can go in. Where is Mohawk? Let me check. 3rd of November also. So 3rd of November is like back somewhere around this candle here. So it has not fly too far off yet. You can still somewhat enter. And if you look, this is your resistance. Your resistance is here. So not too far from the resistance yet. And if you look at this candle, it does look bearish, but don't be scared off by this, because the volume behind this red candle is still quite low. So what can happen is it can probably retrace, hang around there for a bit before it start to go back up. So when you enter, place your stop loss below the resistance level. You can look at my stop loss post lah. And the next one, of course, Dolby Lab, very recent also. Where is it? Very recent also. Here, also on 3rd of November. So Dolby Lab is the one of the counters that keep rising and rising. So it's actually at this candle this candle here. So if you manage to enter there, right, then we are looking at quite a good profit in already lah. But of course, like I said, Dolby Lab have gotten a bit higher already. There's actually no safe place for you to put your stop loss if you are looking to trade this. So in this kind of cases, right, if it is too late for you to chase out, what I can recommend is don't need to chase it. If there is no safe place to put your stop loss, don't chase a counter. Go and play other counter. There's seriously too much of stuff to trade that you don't need to die chase one fast moving counter. Don't FOMO lah. Don't FOMO. Anthem trade call was here, but now price moved back. Of course, the stop loss I think is around 300. So this kind of move, so the stop loss is placed in a way where any retrace, it shouldn't kick you out, because in my years of trading, I have somewhat understand when in a very strong rally, when price retrace, right, I so somewhat have experience and understand that how much it will retrace. So my stop loss are always below that retrace level lah. Of course, there will be rare occasions where it does go all the way down and it will be gonna stop out. Then if it's like that, then just let it be, let it stop out. But most of the time, do try to follow my stop loss religiously lah. So okay, so that's basically for this week, and hopefully everyone have a good trading week this week due to all the green move, basically almost every counter that we have been taking lah. And I do hope, I personally have taken profit on quite a few counter this week. Mainly Geely Auto is one of Geely Auto and High P. It hit High P, I hit my profit and I have additional entry. Geely Auto, I just entered and exit within the same week, which is not really a common thing in today's market lah. But last week was quite a good week. So I do hope that those who are following me, right, you do manage to get some of the trade, and those of the trade that you enter but didn't move as much, right? My advice is that follow the stop loss religiously. If you feel that the stop loss is too wide for you, you are looking at a very big loss, you are holding onto a very big loss, you scared that you will lose further some more, and you want to exit before you hit the stop loss, right? My advice is that most likely you have entered a very big position on a very small account, so you need to adjust your lot size. When it comes to this kind of situation, instead of shifting the stop loss even tighter closer to your entry, right, I suggest you lower your lot size instead to lower down your risk. Don't shift the stop loss that I placed there. Okay, so hopefully the momentum will continue for next week and we can all have a very good trading week in the following week also. Do remember to stay safe in both the market and out in the world, out in the open, in the public environment. Do keep yourself healthy lah. So have a good night everyone. Thank you.